Hi, so the act that we have been doing in the past lecture, that is debiting one account and crediting another account, this act is called as the act of journalism, and the entries that we make from a transaction is called journal entry. So in account there is a systematic way to put those journal entries. Right here is a specific format that everyone follows worldwide to make a journal entry. The first column right here is a date. The second column is particulars, which has the name of the account that is debited, name of the account that is credited. This debit amount and credit account amount is not mixed up because it goes in separate columns. This goes right here, and voucher number is the receipt number of the source document. Suppose you have paid cash to someone and the person gave you a receipt. The receipt has a voucher number named 100, so it will be named 100. This is from the source document, and ledger folio is where this journal entry will go after here. So this right here is example of a journal entry that is a systematic format. You don't have to worry about what technical term it is because we have done this in last lecture, and we'll be doing and practicing it much more than you think. So right here comes the date, that is March 2020, and this is a specific day. Description of the entry is the particulars column. Suppose, and this here is a narration that is invested in business. So this entry says right here that is cash is brought into business, that is rupees 40,000 or dollar 40,000. Okay, so cash account is debited and capital account is credited because cash came in, and capital, as it is a liability, it is increased, hence it is credited. This other entry here right here is rent account debit to cash, which means that rent is paid. Rent is a nominal account, hence debit all expenses. Cash is a real account, debit what, credit what goes out. This is how a journal entry is shown in the books of account. This is a more proper and systematic format for anyone to read. Right here, as you can see, invested in business. This here is a narration of the entry, that is the description of the entry. You are free to write this on your own. Okay, so I have another entry with me which says bought new truck, invested $10,000 cash in truck with remainder on a note payable. The truck cost $28,000. Okay, so truck is a real account, and real account golden rule is debit what comes in, credit what goes out. So truck came in, hence truck is debited, that is 28,000, and cash went out, it's also a real account, that is 10,000 is paid, credit what goes out. And this is a note payable account, that is some amount, that is rupees 18,000 is due, so liability is increased, hence it is also credited. As you can see from this journal entry, the ledgers are posted. A ledger is a T-shaped account which we'll cover in the further upcoming lectures. You can see from here a brief description. A truck is debited. This, as I said, is always a debit side as it is left. This is always a credit side in an account. Hence truck is debited, so this is debit. Cash is credited, here comes credit. Note payable is credited, here comes credit. Also, this is a classic example of compound journal entry which we'll cover in our further lectures. So these are the types of journal books that are sales journal book, purchase journal book, cash receipt journal book, general journal book. So what are these? For example, these are only some types. We can also call them as subsidiary books. So this is like sales journal which only records sales, purchase journal which only records purchase, cash receipt journal which only records cash, etc, etc. Right here I have with me the steps that we need to create a journal entry. This is much more systematic steps that we created in the last lecture, that is our cheat sheet. So whenever a business transaction occurs, we have first to find out what accounts are involved in the business. Second, what is the nature of those accounts involved. Third is the golden rule of debit and credit. We have these steps in our cheat sheet and we'll be following these steps everywhere to create a journal entry. The fourth step to create a proper journal entry, that is now a systematic way, is to, okay, that is not systematic at all. So let's ignore it. Find out what account is to be debited, what account is to be credited. Okay. Fill the date column. Write the particulars, which to debit, which to credit. Okay. So this is basically to record an entry. Now recording a transaction. Okay. Record the name. Record narration. Narration is the explanation of the transactions. And a line is drawn. Okay. To separate one journal entry from another. That is very basic. Okay. So this right here is an example of a journal entry and you can apply those steps right here. As per voucher number 31 of Roy Brothers on 10/5/2013, goods of 5,000 were purchased, 50,000 were purchased, cash was paid immediately, ledger folios of the purchase account and cash account are 5 and 17. So after journal entry, this is where a journal entry goes, that is, it is posted into these ledgers. So whenever you want to look into which ledgers it is posted, you have to just go to ledger number 5 for purchase, ledger number 17 for cash. Okay, we'll cover it in the upcoming lecture. Journal entry of the above transaction is given below. So this right here is the date, that is 10/5/2013. And as goods were purchased, goods went out, debit what comes in, credit what goes out, as goods is a real account, hence cash. Okay, this goods are represented by purchase, that is debit, and voucher number, the source document, the receipt 31. Cash went out, that is cash is to be credited because it went out. There is a separate column right here. You can see debit 50,000, credit 50,000, hence the balance sheet is balanced.